is a joint event of Istanbul Fintech Week and Fintech Association of Turkey. And one of the I think activities that are driven and delivered by the association in order to build this community locally and regionally. And Istanbul Fintech Week is definitely going to be another pillar in the respect in order to build bridges, as I was just saying, Nigel. So building bridges, across the region, so there would be more and more opportunities for entrepreneurs, innovators, also corporates and technology companies too. So today's topic is open banking, and we will be also touching upon how we can integrate, physically and from the mindset, the fintechs, the companies, as well as with the banks. So in the respect, we have two valuable speakers, and let me start with Okan Bey. So Okan Acar, he is the group manager for digital transformation program at Kuwait Turk Bank, and he is a very senior expert, in terms of digital transformation and all. And we were just chatting here that he lives by the digital transformation and digitalization programs for a very long time. So he's one of the experienced persons in Turkey who can, ably resonate on the very on this, quite trending topic. So and the second speaker is Nigel Verdon. So he's a friend. Allow me to say that, Nigel. So
of course.
Thank you. So he is also another quite experienced expert in financial innovation, and he is a banker by profession. But for the recent years, he was very much deeply involved towards his entrepreneurial skills, and his latest invention is called Rails Bank, and he is the CEO as well as a co-founder with that. So Rails Bank is a banking as a service platform for the companies, for the startups, for the fintechs who are trying to provide services to the banks or other financial services companies. And they're also enabling the API programs. And they do not, provide services only in Europe or UK, but they also, organize and also, have been involved in digital transformation programs in the East Asia. Starting from Singapore, as far as I know. But he will be touching upon all those topics. But this is my brief introduction. I hope I didn't make any mistakes with that.
I actually founded my first company in 1996, so this is my third company. So, okay, so first one was is now part of British Aerospace on the FTSE 100.
That's great. So, speaking of that, Nigel, why don't you continue with what you do with Rails Bank? So, sort of inception. A story from the inception would be very useful for all of us, so we can better understand what you guys do.
Sure. So Rails Bank is a banking as a service platform that enables any business or brand to prototype, launch, and scale financial services globally. And that was our mission we set out to deliver. So if you think of us as a platform that enables anyone to be a fintech by embedding financial services directly in their own customer experience, whether you be a supermarket, a neobank, an airport, a food delivery company, employee benefits company. And we like to say that embedding finance with 5 lines of code is what we like to describe ourselves. And if you look at those customer types I mentioned, we help startups like the fintech world get into business, and we help established businesses like supermarkets and others get into financial services by being a fintech themselves. The problem we solve is taking away the huge complexity and significant cost and time of launching and operating embedded financial services. So we enable all our customers, they focus on product and their customers. So we do all the rest. Think of us as the plumbing that and the people who operate the plumbing to allow you to turn on a tap every day. We're in the background with the platform, with the regulation, with the operations and the technology as well. An example of the speed, we enable customers, whether you're a startup or a large company, to launch a fintech MVP in your customer journey in 6 to 8 weeks, fully live, even with a card and your debit card in your brand. We base that on a suite of products. One is banking as a service, which we allow, which enables customers to issue bank accounts, send money, receive money, collect money. Cards as a service, which issues cards, authorizes spend on cards, controls cards in terms of like reset PIN and those services. And for that, we do all the issuing, the processing, program management. Compliance as a service, where customers rent our license and our fraud and transaction monitoring and AML capabilities. And just currently launching credit as a service in the United States. We just opened an office 2 months ago in Santa Monica. Underlying all this, what we call our core Wells Bank operating system, which is a multi-asset class ledgering transaction platform, which we built from the ground up, all our own IP, that can support any financial product. So in the future, we'll be going to insurance as a service, investments as a service, and others. And just to reiterate, and thanks to the introduction earlier, we're live in the UK, Europe, Southeast Asia. I've launched in the United States. For the former platform team from Green Dot is one that well-known competitors in that market. Their teams come and work for us, and we plan to be live with our credit card service proposition in the United States very soon, hopefully by the end of this quarter. So that's thanks to the intro, and hopefully that gives a little bit more color on what we do.
A lot of colors are there. Thank you very much. And Okan Bey, why don't you basically tell us what you do there at Kuveyt Türk Bank? Because we know that it's the largest participation bank in Turkey, but it is one of the largest banks also, right? So, it's not only about the size, basically, because you have been doing a lot of innovation programs, startup wise, also API wise. And we are a follower, but I think it would be quite good if you can just give us a brief overview of what you do overall from your bank's perspective.
Thank you very much for giving this opportunity to me. I'm personally very glad to be here, and also on behalf of Kuveyt Türk, we are also glad to be in the Fintech Week in October. Kuveyt Türk, as you mentioned, is a leading Islamic bank in Turkey. And we are, by asset size, we can be classified as a mid-sized commercial bank in Turkey. There are 6 Islamic banks, and we are the leading one. We have a staff size of around 6,000 and more than 400. We have more than 430 branches throughout Turkey. After giving this brief introduction about Kuveyt Türk, I mainly want to explain what we have done in our digital transformation journey and how it is related with fintechs. First of all, digital is not new for Kuveyt Türk. It's not a 2 or 2.5 years of history. It has a history far before starting from 2010. And we were at that time looking into the mobile, migrating the customers from branch to mobile, branch to internet to mobile. So it was a hard work which was done by our people. But in 2018, mid 2018, we have established digital transformation group to be more focused on digital transformation in Kuveyt Türk, because we don't understand the digital transformation just to digitalize all the processes or the products. We want to also implement new businesses, new way of doing businesses. So it is something a bit different. And we have prepared the digital transformation roadmap for us, which is at that time planned for 3 years, which will be ended hopefully at the end of the next year. And we are almost in the middle of our plan. And under our group, we have 3 departments. One of them is product development, through which we develop new products to our customers. And also we have Business Excellence Center, which is made up by, let's say, robotics, process mining, process development, and also customer experience. In the digital transformation journey, our main objective was, and still the same, is to increase the customer experience. but not only the customers who are buying our services or products, but also our employees. So we need to make implementations, integrations, or build new products in order to increase the satisfaction and experience of both inner and outside customers. And the third department is the Digital Transformation Innovation Department. As you mentioned, innovation works, studies are being held under this department. We formed different innovation groups, innovation teams in order to produce better solutions, ideas for our existing products or build new products. And also, this department is also responsible for the digital transformation program journey, and they are the main responsible for that. And lastly, Fintech integration is the responsibility of this third department. We are the single point of contact for the Fintechs. Any Fintech who wants to work with Quator comes to that department, or comes to me, or comes to anyone from our department, and we are assessing whether they are suitable for Quator to make the integration. Because we are looking into mainly whether the Fintech has a product, whether they have a not very big customer base needed, but we are requiring at least a customer base and a proven market experience. And these are our criteria for the Fintechs. If we are okay with the Fintech, then we make the Fintech to go to the second stage, and we show it to our business units. And these business units might be the marketing, the credit assessment, or risk monitoring. Anyone can be, in our, let's say, in our target. So if they say, okay, then we go to the risk assessment, and we are, taking the ideas, getting the opinions of our risk management, our internal control, or our IT department. If all the stages are completed, then we are presenting this to our top management. And if they say, okay, then we start the implementation. This is how we deal with the Fintechs. And up to now, we have made a couple of integrations with them. And when we talk with them, they were highly satisfied with the process, because the process is fast enough, and they can have the chance to explain their products or services to the different parties inside the bank. I think this is a brief introduction, because if you let me to talk, I can talk more minutes on it, but I need to give the session to you.
I really appreciate it, because we know that Quator has been engaged with the fintech ecosystem, and as you said, quite clearly that you have been supporting the startups. But it was a corporate policy and towards openness, towards integration, which was sort of a myth, almost 10, 15 years back. So it was not quite easy by then. So today we're discussing about open banking, right? Openness, open innovation, and all. And I would like to sort of bring the whole discussion to that level, so we can, deal with that. And before asking this to Nigel, let me just give you this anecdote. So we conducted this survey at a bank, right? So the question was that, one of the questions in that survey was that, which one of the below defines the open banking best? The first one is, it describes a corporate policy in which a bank pursues an open door policy to current and potential customers. Second one is, it defines a programmatic structure where a bank is more open and transparent with its customers and stakeholders. Third is, it refers to a secure way to give external service providers, third parties, access to financial information and customer data of a bank. So the answers, there's no surprise so far, but aside from open door policy, which might be a bit different, and odd, in this questionnaire. So the answers were a bit even, equally distributed, I would say. And that is a surprising part because the respondents were bankers. So I think even though it is a trending topic, a hot topic, there are still, lots of unknowns about open banking. So Nigel, and you're definitely one of the best experts to speak on this. What is your take? How do you define it? How do you describe it so our audience can better understand, clearly understand that?
I think one of the challenges of open banking, which is I think the experience that so the UK's been through and others, is to understand who exactly is the customer and what's it actually delivering for them. Because there's a lot of media conference and all sorts of places where talking about open banking in the context of the consumer and everything. And quite frankly, the consumer, I don't think really cares about open banking in any way or form. They don't actually understand it. And if you go to ask your grandmother, what is open banking? She won't have a clue. You can go to, here's a wonderful app that allows you to fill your bank accounts. And your grandmother will go, oh, that's fantastic. I've always wanted that. It's convenient. But doesn't actually care it's open banking. So one of the clear things we have to, I think, identify with open banking on any countries on the journey is to fully understand the customer, which in this case, open banking, the customer is the industry, people like the Fintechs, the credit, so lenders, to accountants, to so accounting platforms as well. And helping them understand the how they can utilize open banking for their services. Another observation of open banking, it only does two things in reality. It allows you to really check account information and the European anyway, initiate a payment. And those two things are useful in some use cases like credit and others, but it doesn't give you the whole ability to actually build a financial services proposition to customer at all. You can't issue bank accounts, you can't do credit, you can't do cross-border payments, you can't do foreign exchange, and all these other pieces. So it's limited in applicability, but saying that, it does now give access to data which as a bank, you're always far, far, far ahead of the fintech and other worlds in terms of understanding the customer, because the banks had all your data on you, the transactional past. The smart ones have done stuff with it. The others haven't really capitalized on that data. So that now is available to everybody. A second one where it has been sort of interesting has been validation of identity. Where you actually use open banking to validate that somebody actually, yes, you do have a bank account, and validation of salary and other places where it was difficult in the past. Credit agencies aren't exactly the most useful when you're sort of, for example, assessing, is this bank account or is this person get the salary coming in, is it stable? Or prove it to me, the banks, that's it. So that has applicability in a whole load of use cases. But I think basically, open banking could go an awful lot further.
Okan Bey, what would be your take? I mean, let's bring the context to Turkey in a way, because again, half of the audience, well, they're from Turkey in a way. So, and you are also, representing a bank in Turkey, and you have been, pursuing such policies. But in the meantime, it has something to do with the regulatory framework, because we know that banks are subject to stringent rules by the regulators all the time when it comes to data, sharing it, accessing it, so on and so forth. So, what is your take on this?
As you mentioned, if you ask the bankers what is open banking, there might be different answers. Also, we are discussing this issue with our friends, with our colleagues, and our understanding might be different also. But what I understand from open banking is the use of APIs to allow the third parties to develop or build applications. And the banks should share information with these third parties in order to make the customer to ease their transactions. And the customer will be more comfortable, more flexible, and they don't need to go into each and every branch of the the bank, and they may use only one application to reach each every service of all the banks in Turkey or in the world. You know, traditionally, we were forcing the customer to go to each bank with their own application. If you want to enter Bank A, you need to go to Bank A mobile branch, or Bank B to Bank B mobile branch, or Bank C mobile branch. But with the open banking, after all this, situation settles, then the customer will go to one application which will be connected by APIs to every bank. Turkey, when we come to Turkey point, Turkey is now following the European Union legislations or enactments. You know, in PSD1, which was enacted in 2007, Turkey followed this in 2013 by enacting a law at that time, which were mainly about the e-payment institutions. And after the directive, PSD directive, was revised in 2015, there were different, parties, different, statements were seen and were encountered by the parties. Then Turkey made the legislation in 2019 in order to, be in line with that. So in Turkey, we have defined TPPs, AISPs, PISPs, and so that now our ground, the legal ground, is ready for open banking. And central bank is given the most important responsibility to carry out this issue. Now everything is, most of the things, let's say, are ready for open banking. And also the banks, they were waiting for that. And now they started to make integrations with Fintechs. And they started to, be in line with these legislations. And of course, there are some, points that should be enhanced or improved by the banks. Maybe we need to, develop our APIs, subject to some standards. And also we need to understand the Fintechs better, because 5 years ago, we didn't want to communicate with the entrepreneurs, because we were somehow, maybe this is not the right word, but I'm talking about the banking sector, we were somehow underestimating their way of business. But now we understood that we should depend on them, we should count on them, and we should trust them, so that we can improve our services and our offerings to the customers. I think in the coming years, not more than 1 or 2 years, we will see different and disruptive or challenging examples in this field.
Yeah, just a comment on that. I think one of the challenges is standards. If you look at the European legislation, which essentially Turkey does mirror, is there's no standards actually defined. And so for people sort of veer towards either Berlin Group or others, but there's no obligation for standards. And so you then got the vacuum gets filled by companies like Plaid, Trueleo, and others, because there's no standards. So they make a standard out of non-standards. And that's a real challenge. If you look at tech adoption in the past, this type of thing, until you got standards, it really won't take off. SMTP, which is a standard for email, email systems never took off. And I remember going through it when the internet appeared in the 1990s when I launched my first company, which we did the very first foreign exchange trades on the internet. There were multiple mail systems then, and they all didn't talk to each other. Well, there was gateways and stuff. It's totally inefficient setup. But it wasn't until everybody adopted SMTP that everybody emails prevalent behind us. We don't even care what protocol it was or standards. It's email I send to Okan. Okan gets my email. Hey, we don't care what's gone underneath all that. It's the same thing with open banking. I think one of the big challenges is making sure there are proper standards for there, so interoperability is simple. At the moment, it isn't at all. The UK, especially as well, isn't standard. Another one is the way it was rolled out across the UK and Europe initially. It was an IT and a compliance department issue. It wasn't a commercial implementation, and I think there's a combination of the people tasked with implementing open banking didn't have the relationships to the CEOs of the banks, didn't have the 10-year relationship with the CEOs of the banks. And I think that's one challenge, thing I'd throw out as a real opportunity for Turkey, is to look at open banking as how can that enhance your business model to make money. And I've seen Europe, you'll see there's a whole thing, value-added APIs and that stuff. I put that aside. That's not a business model.
This is a very valid point, by the way. It shouldn't be only the IT perspective. It should be taken as a business model.
Oh, totally.
Now, we our main aim is to introduce these fintechs not only to the business side but also to the IT side, and there should be a holistic assessment for them, and for the APIs also, and for the other needs. If you just develop an API and request the fintech to come and use it, it doesn't work. You should go to the market and understand the market. Then afterwards, you should develop your API with the need of the market.
What I more mean is inside the bank, there isn't a P&L associated as in a revenue side of the P&L with open banking. It's seen as a cost side of the P&L, and I think one of the real challenges is payments are seen on as a revenue side. Transaction banking seen on the revenue side, retail banking, corporates are all seen on the revenue side. And until, I think one of the challenges is it is like payments go across compliance, technology, front office, back office operations, so should open banking, and be clear where it sits in the P&L to make it successful, because you and then figure out what value-added services and ways that a bank can interact with the customer, and to your point, Okan, and understand the customers, whether it's fintech, whether it's credit agencies, whoever, to the value that they would pay for that service, and so they should say it shouldn't just be free, and it's just one of the consequences of open banking being forced on the banks by regulation, anti-competitiveness and things, rather than this being an industry initiative where it's opening up the industry and regulator wasn't needed. It wasn't happening, therefore regulation was put in place at the very, very beginning. Another observation I'd say is on most bank boards throughout the world, only about 3% of the occupants of bank boards actually have a digital and a commercial digital background. Compared to, look at Google and others, the boards are fundamentally different. I'm not saying the board should be changed, but if you're going to go into a digital arena, you do need to open up the board, not just being risk management, product, and say consumer, retail, and corporate, etc. banking experts. I think you need to open up to what is digital, and how does the business model and the bank move forward in digital. It needs to be an agenda right up at the board, so it doesn't just become a compliance and an IT issue. And that's just an observation of how it's been rolled out in different countries to make it successful, because the fundamental principle behind open banking is superb, and it's not just about APIs. APIs are tech. Tech is the implementation of a business model, and the figuring out how a P&L and how the unit economics and everything work, and the value add and the value prop to customer, all the fundamental pieces that need to be put in place. And the APIs are just the way you access it. It's like the banking app is the way you access retail banking, but there's a value prop behind retail banking. There's product, there's the marketing side, and operations, compliance, and everything. So it needs to be, I think, brought right to the front end of the bank as a product, and seen as that way. And then I think there's all sorts of things we can move on, because then it becomes motivated. Because a lot of the banks, I've observed it across Europe, aren't usually motivated to go into open banking. It's just because I've been forced into it. And there's nothing worse than motivating somebody than forcing them into the corner because they think it's boring. But if you show the economics of it and make money on it, and everybody makes money on it, hey, there's no reason why not to. There's just observations on how it's been implemented, and if it was implemented well, people like Plaid and TrueLayer wouldn't exist, if you see what I mean, because there would be standards. So if you think of Plaid as TrueLayer as like in the old days of email switches, that would take it from Apple email to Internet email to Lotus Notes email. And you always got the email in some bizarre format when it arrived to you going across the switch. It's the same thing in open banking. And you look at TrueLayer and others, the switches. They're great companies, but they exist because of aren't standards.
Would it be okay if we just organize this discussion, because Nigel, you have gone through a lot of things basically, and then you have the whole thing basically, and in the last few minutes. So can we basically look into this open, because as you said, I mean, regulators are there, they are regulating the whole landscape, and some of the banks, they are like, are we missing anything? Are we going to be basically, missing our competitive edge? So let's jump into it. It's not such a thing. As you said, it's a complicated thing, and there are lots of ramifications with that. So, but in the meantime, I guess we need to clearly define what are the pros and cons for the participants, right? Let it be banks, let it be third parties, including fintechs, and let it be customers too. I mean, how we can organize this discussion? Can you please, quickly tell us what are the, I mean, why don't you do that from the customer's point of view, as well as for the third parties? Maybe Okan can help us with the banks.
So from a customer is, say, a fintech company, a landlord credit company, a lending company of some sort, because they don't need to be classified as fintech, can be old school businesses who's better data. They still got to go through and implement a ton of infrastructure to make it work, and that's why you go to TrueLayer and others, because they've done that heavy lifting on the infrastructure. If you wanted to go and connect up to all the European banks, you'd find the implementations are all different, especially when you use a standard called MCI. So if you look at the third parties, TrueLayer is a third-party provider, and they're regulated on your behalf to access account data at a bank or any money provider. And I, as a customer, can either become a third-party provider myself, regulated under the ASIP or PISP regulation, or I can go to a third-party provider who can do that on my behalf. So that structure is actually a reasonable structure and good. For payment issue, and it's good, I think, for account information. For payment information, a payment initiation, which is where I, as a customer, can, on behalf of an account holder, through either a third-party provider or my own license, connect up to my consumer's bank account on their behalf and allow them to make a payment. And this is meant to be the panacea of cheaper e-commerce. For example, you don't pay credit card fees or anything. But there's one slight issue on that. With credit cards, debit cards, and others, bank cards, you've got this thing called chargebacks, and fraud protection, and a ton of others, of which the payment initiation regulation is pretty much near zero. And I think because of that, especially under, excuse me, under the rollout of, excuse me, something caught my throat, because of the rollout of instant payments across Europe, UK, and other markets, the fraud has gone through the roof. There's about 10 to 15%, or say UK faster payments are fraudulent, and so it needs that's what Visa and MasterCard bring to the table, is they bring those fraud rates down massively, because of that's why you pay your scheme fees. So I think we need to extend it. We started on this journey. As a customer, I want to do payment initiation because I think it's super cool and it's cheaper for the customer, cheaper for my consumer, when actually it puts your consumer in a worse place because all the protections of using those credit and debit card are removed. So those are things. So putting in the shoes of a customer, it's great for data. I can do interesting things from a credit side, interesting things approving somebody's salary, and interesting things on proving identity. On payment initiation, I think it's still we've got to put legislation or form insurance type bonds for third-party providers and the underwriting ASIPs, which are the people who hold the accounts like ourselves, because we actually underwrite all the liability for no gain on that.
That's great. Okan Bey, can you help us with the points of view from the banking dimension in terms of the pros and cons for open banking?
Yeah. I can say, the banks are all working under traditional banking ground, and we like to work like this. But we see that we need these kind of services in order to present new opportunities for our customers. And this new tax, let's say, or new regulation allows us to give more, let's say, better offerings to our customers. So in the bank side, we need to develop our APIs. If we think about ourselves as a traditional banks, we need to develop our APIs. And we need to be ready to share this information with our, with the third parties. And if we don't do that, then it means that the environment will transform ourselves. But we shouldn't wait for that. But on the other side, we know that we are really very much advantageous in some fields, such as the security issue is the top number one issue in banking. And also there is a legal, the legal ground of the banks, the traditional banks are very, very, let's say, solid, sound. And we are already, in line with the compliance of either the Turkish and the, world, let's say, legal issues or the enactments. And also our system is stable, and we have more customers. And also there is a big trust from the customer side. But on the other side, if someone or if an entrepreneur, a startup, a fintech, or a TPP wants to work with us, they need to, they are somehow advantaged in some kind of fields, such as they are giving, their customer experience is better than the banks, and their UX design is better than the banks. And also they are always generating some ideas, and they are making good implementations and fast implementations. They are not using the procedure and the bureaucracy in the traditional banks. But they have less customers, and they have not sufficient trust from the customer base. So, we need to find a, playground with these companies. And I think the new legislations in Turkey will help us in doing so. It is, I think, a big opportunity for us to transform ourselves, but for the third parties or fintechs or the startups to be more professional in their offerings. I think there is a really big opportunity for everyone here. And we will see especially how central bank will perform in the future, because their role, they have a both intermediary role right now and also an authority role right now. So in the future, and as far as I know, they are reorganizing themselves, and they are thinking about better, special payments, infrastructures, services, and also products, which will certainly be, agreed or accepted by the banks in the future. And we have started to see some of them. We are in some of the working groups which were established under central bank. And when we go there, we see that there is a big appetite for this new situation. As I mentioned before, I think in 2 years' time, we will see big improvements in this field, in the traditional banking side and also in the fintech side. And after 2 years, I hope in Turkey, we will see a very fruitful, productive applications, after which maybe the other countries take our applications or practices as examples for them.
I think, Nigel, what Okan Bey has been saying is that what I understand is he is very optimistic and he sees lots of opportunities with this, new phenomenon in a way. But I think what I have observed from the market that there are mixed feelings by some of the banks participants as well. So what is your feeling and what is your observation on that? I mean, so are the banks? I mean, most of the times they think that it is an amigo or enemigo, which one, or both? I don't know, or neither of them.
Yeah. Two things. I think the industry both needs each other. There's a great paper by Gartner Group, which predicts that 80% of financial services businesses in their current configuration won't exist by 2030. And that fundamentally hangs around a single metric, which is called a cost-income ratio, which currently in the banking world is totally out of whack. And this is why the equity price is held low at the moment as well. So we actually have a fairly existential crisis within the banking world, which needs to be addressed, and because the operating costs are basically far too high, and low interest rate environments over the next, which we're going to have now for the next 5 to 10 years at least, thanks to COVID. It's going to be very challenging because your ALM activities on the balance sheet, running the balance sheet, are going to be slightly more challenging because of the price of of investments that you can load on the balance sheet. That's going to be very, very, very challenging. So we've got a challenging environment for banks, and that's not through their own fault. That's just because of where we are. In terms of working together, I'll relay a story from Paris Fintech Forum in 2 years ago, when we could all get together in a conference. And I remember last year I was with you guys in Turkey. It's an invitation, which is very kind. But the CEO of a well-known bank made a comment on the panel I was on, that because they had a banking license, they could write good software. And that to me was an idiotic comment, because my co-founder is a nuclear weapons officer in the submarines of the Royal Navy, and whoever wrote the software for Polaris or NASA software, that's good software. You don't need a banking license for it. So the key thing there is understanding the banking license is there for reality of being able to take deposits and do anything you want with those deposits and maintain enough capital so you don't introduce risk to the system. It's not there for writing software. It's there for making sure you have a living will, making sure you have good quality outsourcing contracts and that type of thing. That's what banking licenses regulation gives to you. So getting them to play together well is understanding that people like in the clouds, people like AWS, they're sensible people. They get hacked into by millions of people per day, probably per hour. And your data center, if you maintain your own data center, doesn't see half of that activity, not even a tenth or a percent of that activity. Ergo, there is providers who are suitably qualified because they've got massively more experience and massively more exposure to like security issues. So, and then it comes down to how do you organize your tech development. Google, Amazon, and to some extent ourselves, they're able to get like releases out every few minutes, and they probably, as we're speaking, Zoom's probably doing a release of some sort of feature or bug that they're fixing. We get about around 20 releases out a week, and we're going down to hourly release too. Our real challenge in that, though, and this is where banks, you've got to respect them, doing that type of environment and that speed within a regulated business, and we're regulated too. We're direct clearers with the Bank of England for sterling, for example. That does provide challenges, especially if it introduces security issues. I think the UK banks, at least, have not made themselves exactly paint themselves in a great picture of the amount of security break-ins to the banking apps, which have caused a lot of this push payment fraud in the UK. I think there's a re-engineering of tech within the banks as well to be able to work in this type of environment. And I'm also sensitive to the fact that when you've got a COBOL mainframe running at the back end, and the front end is running at the speed of so the back end is batch, the front end is real time. That creates a dilemma to work within too, because you've got to keep things in sync and stuff. And that poses a huge challenge. So playing nicely together is about respect both ways. And I've seen the CEO of a very well-known fintech basically telling Barclays where to go and everything. And you say, you don't tell that to Barclays because all they do is shut your account. And you need them to do your business. Why insult them in their own offices? It's insane. So there has to be that sort of, this individual never worked in the banking world before. You look at a lot of people who have running fintechs and other platforms. A lot of us have actually come from the banking world, had senior jobs in the banking world, had been P&L owners in the banking world as well. And for some reason, that seems to be forgotten as soon as you walk into a bank. Okay, that says, oh, you've gone to the dark side. No. So I think challenge, as Arikan says, is let's be open now. We're not in the days of 2012 where it was totally anti-bank because of the backlash to 2007, 2008 and the credit crunch. Banks have been around hundreds of years. They've kept people's money safe. Let's ignore Lehman's for a moment. They've kept money safe and they've operated in a good, orderly manner in general. There's always outliers. And they take great pride in their brand of that safety. And therefore, anything that impacts that safety of that brand, they take very seriously. And as a fintech, I know we can do anything super fast, but we can't expect to work with somebody and not pay respect to their brand and their reputation for safety. Because if they weren't safe, that's a systemic risk to society, if you see what I mean. Because you'd get the run on the banks like Northern Rock in the UK when there's a run on it, boom, people lost money. Allied Irish went boom, and a ton of people lost money in structured products and other things that were off their balance sheet and stuff. So we've got to be respectful. Perhaps we need somebody to run like yourselves on the conferences, a how to be respectful course for both parties, if you see what I mean. And that to help people, because then you can explain it clearly. These are my issues. This is what I've got to deal with. For example, rolling out AWS, for example, or cloud infrastructure to something like HSBC as a global bank. It's not a decision that be made in 15, 20 minutes or a couple of hours like you can in the fintech. Say, yeah, we're going to go AWS because there's only two of you in the room. When you've got thousands and thousands of people that this impacts and change and everything, you've got to respect that decisions take longer, okay? Because the net impact of changing something can impact safety, can impact people's money. And it's the same with changing core banking. Oh, why have they got such ancient core banking systems? Well, try changing a core banking system without making a mistake of stuff that's been hard-coded in by COBOL programmers years ago and all sorts of stuff, It's like driving along 100 miles an hour and changing your wheels by whittling out the window at the same time. It's massively dangerous. And it's not worth doing. And so we need to respect that. Core banking systems and co-broking still around for a few years. They probably land into the next century. But we've got to respect that, and that's why some things are slower than others. And then and because of that, when you need changes, like if you're starting up, say the agent banking product that the UK high street banks have for larger companies who want to do banking, that was designed for, it's bespoke. And so you've got to get on the development schedule to get it developed and implemented and stuff. It's not like our world where everything is not bespoke. It's like Salesforce. It's like us. Everybody gets the same because we're in a totally different model. So when somebody has to do something bespoke, it's not instant. It takes time. And if they've got a bigger client, the bigger client is probably going to get there above you. So if Ant Financial comes in, they're going to get more attention than who is also a fintech than me as a fintech in, say, Standard Chartered in Singapore. So those are, I think, the things we've got to respect both ways and things. Okay, just observations over the past 10, 15 years.
Thank you very much. But you touched upon something that is quite fragile in countries like Turkey, and I also see a question from the audience about these cloud-based services. So, well, apparently there are some stringencies when it comes to regulations in Turkey as well, particularly in banking. Okan Bey, so how would it work? I mean, because of this, limitations, because of this, so how we can find the middle ground there?
Yes, we need to find a middle ground for that. We also want to use different kind of services which are working on cloud. By the way, cloud is not restricted in Turkey, but the cloud should be in Turkey. If you are using an abroad service, let's say maybe Nigel's company, if it is, if the data center or if the data is kept outside Turkey, then we cannot work with them. But in the future, there would be two scenarios. One of them, the restrictions may be a bit, eased, maybe, or the companies may believe Turkey more than they will rent some data centers in Turkey. But this is something, we cannot, discuss this with the. We discuss it with the authorities, but this is not in our hands. I think there are also, tangible and also, reasonable, statements coming from the authorities, because many countries also making this kind of restrictions, and they say that come to our country and rent a data center here and make your customer to work on cloud. But this is an investment, so most of the companies, they don't prefer this. I'm sure in the coming years, I am optimistic about it. In the future, both parties, either the authority side or the vendors, let's say, they will find a middle ground to make the customers happy on it.
So and just answering one of the questions, to Gerham, who's just put it online. If there's no AWS, no Google, no Azure in Turkey. I think there's a common issue around in Indonesia, Philippines, as well as Southeast Asia, and a ton of other countries, not just Turkish issue. Azure, AWS, Google, and others are all, and on the other side, so is Ping An, so is Alibaba, and everybody making cloud computing available. But there is, for example, this company called Equinix, which is pretty much prevalent everywhere in the world, and nobody's heard of them. But all the points where the internet comes together, and originally did, that's Equinix. They have data centers everywhere. And I know for a fact there is a sort of a portable AWS, and I think Google Cloud are working on the same thing, that you can put on sort of managed in country in a data center in the country. spin up the equivalent services, and make sure your data architecture is designed for that, which is one of the fundamental problems. So your data architecture can be designed in country, and your processing will be done outside country. And the example of this, I was working at Swiss Bank Corp in the 1990s, and my first company, Evolution, they're also our biggest client. They're called UBS today. We had Swiss banking law. So the issue with Swiss banking law is, again, you couldn't see the name outside the country, but you could see the mnemonic. So there's mechanisms to do this, and regulators are open-minded, because otherwise you block global countries, which I don't think is the intent. I think the intent is protection of data, which is a good intent, and it's working out. And I do agree, AWS Outpost is not only in a few countries going, but it started, it didn't exist at all a little while back. So the people are working towards make that happen. If not, there's other ways around it. And I know Equinix have quite a few products that help implement this. And the other way is you can also go to the regulator and ask for a waiver and say, here's the controls I'm putting around it. Are you okay about this? With containment, etc. So there are ways to operate this way. And as we wait for legislation and infrastructure to catch up with us, we keep butting up against the same problem in a ton of countries, because through our own expansion, because we seem to have chosen difficult countries to go to, if you see what I mean.
I think this cloud discussion might take some hours basically to discuss, because it's been a hot topic in Turkey too. I mean, Nigel, I'm not sure if you're fully aware of that, but
Probably not. No.
It's in and out, and because of the regulations in Turkey, but it is definitely a very important subject. Perhaps, I mean, we can just close by having the last round of the questions, and so we can be on time, not literally, but perhaps we start a bit late, so we can just put up with it. So my last question, because it is I have this sort of quenching desire to ask this one, because Nigel, I know that you have been focusing to some of the Southeast Asian markets, and one of the conundrums in countries like Turkey, or some of the countries like Indonesia or Malaysia, so access to financial services is not fully achieved. I mean, maybe Okan can also help me with the numbers. As far as I know, there are 20 million people in Turkey, and who do not have any bank accounts, right? Our banking services are quite sophisticated. I mean, mobile banking practices, applications, they are quite well advanced. So when it comes to those who have access, so that's fine. But when it comes to those who do not have access, which is a bit of a cloudy picture, that it might be some kids underage, it could be housewives, so on and so forth. But there is this group of people. So do you think that this open banking thing could be a cure to fix this problem? So what is your experience with the Southeast Asian markets?
So open banking is not a cure to financial inclusion at all, because you've still got to have a bank account at a bank to be able to operate under open banking. So by definition, if you can't get a bank account, open banking doesn't help you. So that is, and there's 92 million unbanked in Europe, for example. There's 8 million in the UK. So it's a fundamental problem, and open banking hasn't helped the number. It's gone down below 8 million because of some of the fintechs taking it on. The fundamental issue there about the observation is, one is cash-based societies and moving to electronic, because financial inclusion generally works on an electronic-based society or e-payments type society. Number two, or massive deployment of e-payments. Number two, it also works if they can actually open a bank account. And one of the things that stops that happening is the economics of banking. So if your customer acquisition cost is roughly $350 and your lifetime value is $250, which is most G10 banks, why should you take on all these uneconomic customers who are highly unlikely to go into high margin lending products from you? So you got to, I think the financial inclusion is, you need a new economic model of banking, which is primarily the e-money type license, where it's lighter, to start people, because they make economic sense to bring into banking. If it's not a bank, it's an e-money provider, in partnership with a bank who could be providing the underlying balance sheet, and you've got a cost model, an economic model that allows financial inclusion to work, and also different controls, and you've got identity issues too as well, and things, and you've got different data for credit. There's no credit rating agency in Indonesia, but there's mobile phone usage, which is massively correlated to credit risk. So you've got some other sources rather than going to normal credit scoring. So I think financial inclusion is a partnership of banks to provide where the assets actually sit, so where liabilities, the deposits sit, and the assets sit when you're lending, and the fintechs who are able to originate, manage, and control and provide the product and distribution, etc., to those unbanked communities. And then there's a third piece, which is rolling out electronic payments type thing, like the way Chinese have rolled out QR code capabilities everywhere. So wallet-based infrastructure immediately becomes available to people. So it's if I was sitting there as a CEO of a bank, there's very little I could do, even if I'm forced to, because I'd just be losing money hand over fist. But what I can do is partner with people who will change that, so I can make change by partnering.
Well, that's a very great summary. So Okan Bey, so I know that you have been also having this product which is called Senin Bankan, your bank, right? And you also push towards mobile banking, sort of this neobanks style banking. So what is your take on this last question?
Senin Bankan, as you mentioned, is a Turkish term for your bank. We have initiated the service in 2015. At that time, as far as I remember, the financial inclusion rate, the banked population, let's say, was not greater than 60% in Turkey. Turkey, is a big country. There are differences between the western side and the eastern side, of course. The western side is somehow similar with the European Union, but the eastern side is somehow similar with the, let's say, Asian countries. In European Union, the financial inclusion rate, maybe, I don't remember, but on average, I guess, is more than maybe 90%. But in the Asian countries, in some places you find 30%, 40%, 35%, very low figures. Turkey is in between. At that time, in 2015, as far as I remember, it was around 56% something. I maybe looked into the figure maybe 1 year ago, it was around 75%. So there was a big jump in Turkish financial inclusion rates. When we initiated this Senin Bankan channel, let's say, our main aim was to increase the banked population and also to get the portion of the banked population and to introduce them to the financial system. Of course, there are several reasons behind it. One of them is, they are afraid from the banks, because in many of the Turkish banks, they are applying some fees for them, and they don't want to pay fees. On the other side, also, they don't have enough money to invest in, and the bank branches are far away from their houses. So these are the reasons behind not having a bank account. But with Senin Bankan, since it was a remote banking channel, we opened the account for the customer remotely. The customer doesn't need to come to the branch. They just enter their information into the website seninbankan.com, and afterwards the courier service is triggered after the information is taken from the customer, and the courier goes to the customer face to face. They take the ink signature, because it is still a requirement in Turkey, taking the ink signature, and afterwards the account is being opened. Especially in the this virus times, when we were at home during let's say the spring, from March to, let's say, June, the application numbers peaked at that time. We were taking maybe around 1,000 applications per day, but we started to take more than 1,500 applications. Because the customers, they were not able to go to the branch to open the accounts, but on the other side, they need to open an account. So they understood the ease of the service here, because to open an account, just sitting down at home is very comfortable for them. And also, I'm not, saying that the financial inclusion rate was increased by Senin Banka, but there is a tendency to make banking also increase the bankable population in Turkey, by the way, because the people understood that in order to reach qualified services, they need to have an account in the branches, in the banks. Also, in addition to Senin Bankan, many of the Turkish banks, they also they started to give, mobile account opening services or digital account opening services to the customers. But we are doing it in a separate bank or separate channel called Senin Bankan, in order to communicate with the public more separately and in order to make them to understand better. Up to now, it's going very well. And also we are thinking about to, convert it to a banking platform in the future. When we define the platform banking, maybe we can say, it is somehow beyond open banking. So with the platforms, also we will be giving different services. With Senin Bankan platform in the future, we will be giving different services, not only banking services, but also insurance services or other services not related with financial transactions in the future, so that the customer will use Senin Bankan as a platform. Now we are working on it. We are in the beginning. But after 1 year, most probably, we will be presenting some of the services to the public.
I think from the first examples of banking back in Siena and Italy, the banking has been transforming a lot. But for the last 40, 50 years, maybe by the introduction of ATMs and afterwards SWIFT and having the first automated platform in Nasdaq in the 1970s, there has been this, change, which was massive. So, but it looks like it's not going to stop there. So overall, this transformation, I guess open banking is just going to be another milestone, and we will be seeing the impact of it, right, over time. And maybe it will vary. I mean, the impact will vary across the board and across the countries and markets. Gentlemen, thank you very much for your valuable comments and contributions. And Nigel, your overview from global markets from North America to Southeast Asia. Thank you very much for that. Okan Bey, and your insights from the Turkish market, as well as your ongoing and past programs towards digital transformation, quite valuable comments. Thank you very much, really appreciate it. Participants, audience, thank you very much for your time as well. Please stay tuned, and we will be coming back to you with other events and try to register with Istanbul Fintech Week, and there will be more and more discussions there. Thank you very much. Appreciate your time. Stay healthy and safe, please.
Thank you.
Bye.
Cheers. Bye.